Are home prices still climbing in 2025? The answer, for most places, is yes. The National Association of Realtors just released their first quarter report, and there's a lot to unpack. Hi, everyone. I'm Sarah May, and today we're breaking down the latest trends in the U.S. housing market for the first quarter of 2025. Whether you're buying, selling, or investing, this data matters. Let's start with the national numbers. More than 80% of metro areas across the country saw price increases in the first quarter. That's 189 out of 228 markets. Despite mortgage rates hovering between 6.63% and 7.04%, the national median home price rose 3.4% year over year to $402,300. That's a solid gain, but it's slower than last quarter's increase of 4.8%. So while prices are still rising, the pace is starting to cool. Regionally, the Northeast led with a 10.3% jump in home prices. The Midwest followed at 5.2%, the West came in at 4.1%, and the South, even though it had the highest sales volume, only saw a 1.3% increase. That's interesting because the South has experienced strong job growth, but this quarter, it didn't translate into higher home values. Let's talk about the top performing markets. The biggest year-over-year price gains were in cities like Syracuse, Montgomery, and Youngstown, all posting double-digit increases. Syracuse, New York rose 17.9%, Montgomery, Alabama increased 16.1%, and Youngstown, Ohio was up 13.6%. Others on the list include Nassau, Suffolk, New York at 12%, Toledo and Cleveland, Ohio at 11.1%, and Gulfport, Mississippi at 10.5%. 6 of the top 10 markets were in New York and Ohio. Not the usual suspects when it comes to red-hot real estate. Now let's look at the most expensive markets. California dominated, taking 8 of the top 10 spots. San Jose led the list with a median home price of $2,020,000. According to Lawrence Yun, the chief economist for the National Association of Realtors, these sky-high prices are the result of years of underbuilding and low home ownership, which continue to widen the affordability gap. Not every market saw growth. 17% actually experienced home price declines, up from 11% the previous quarter. But many of those are starting to rebound. Cities like Boise, Las Vegas, Salt Lake City, San Francisco, and Seattle are beginning to recover. Others, like Austin and San Antonio, are still facing challenges. But with strong job growth, they may turn around soon. Affordability remains a major concern. The average monthly payment for a median-priced home is now approximately $2,120, up 4.1% from last year. First-time buyers are now spending about 36.8% of their income on housing. So what does all of this mean for you? If you're a seller in the Northeast or Midwest, the market is still working in your favor. If you're a buyer in a high-cost market, you may need to explore creative financing or consider more affordable surrounding areas. And if you're watching markets that are currently down, don't write them off. With continued job growth, recovery could be just around the corner. For more real estate updates, market insights, and tips to navigate this evolving landscape, make sure to like, subscribe, and leave a comment below. Let me know. Is your local market heating up or cooling down?